The most important development is not what any particular Fed governor says or any economic data point. When you have the possibility of a ceasefire and the end of civilian casualties in the news every night, and you see that pressure come out of things like wheat and oil and gas, not that prices are about to mean revert to pre-war, but just that edge coming off, I think it's the most helpful thing for the market. And you can see it, like when you look at the travel stocks, that's an obvious. But then even look at the autos. Why is GM up 5% today? Why is Ford up 6% today? They're not doing stock splits like Tesla. What's going on? It's just that general easing of some of the harshest of the inflationary pressures that I think are really positive. Now combine that. You've got REITs screaming hot today. I'm in Simon Properties, looks great. CB looks good. PSA looks good. Public storage. That whole index is looking good. The airlines, I mentioned travel, credit services bouncing, Visa, MasterCard. So it's very broad-based, in addition to all of the high-growth tech stocks that have upped the most off of their lows. Arguably, they had the most to bounce because they're down the most. But I want to point out Apple, another stock I'm long. Apple's coming off its best week since 2003. You literally have to go back 2 decades to find a week in which Apple is up 16% from the lows. And keep in mind, this was a tiny market cap in 2003. So this one is really meaningful. It matters for the Dow.
Well, it's up 10 straight days.
For the S&P 500.
It's going for 11 straight
That's right.
days. It was at 150 2 weeks ago.
That's right. It's very, very meaningful to the markets. Not like spiritually, statistically. Apple is the thing that matters more than any other thing we could point to, and it's a dramatic move off the lows, and I think that needs to be respected along with all that other sector stuff that I gave you. So I wouldn't argue with anything that Jim had to say there, but I don't think that that means anything about what we're going to be dealing with in the second half, and I would not look at an incredible bear market rally and say that we could definitively say anything is quote unquote over.
I get you, and I'll come back to you real quick before I move on. But I note the change in dialogue, the change in narrative a little bit from you, because when I asked you these same questions before, you led off multiple occasions with fears of Russia and Ukraine escalating into something possibly nuclear. You mentioned that multiple times. I didn't hear that out of you at all today. And as I said, the further you get from those lows, the harder maybe it is to keep building a potential negative case. The resiliency of this market is perhaps now its greatest asset.
Price is clearly telling you that the worst may be over. I don't think you could argue with that. However, I would just point out this week we had an inversion of the 5-year Treasury and the 30-year Treasury. The last time that happened was in 2006. Stocks continued to rally well into 07 and then went down 60% from their highs. So we should not interpret stock rallies in any condensed period of time as being indicative of something larger still to come. I've never in my lifetime seen the Fed be able to orchestrate a soft landing. I hope they'll be able to do it this time. It doesn't seem like that's what historically would be the best probability bet. So, and I'm not even saying recession this year, we have to have recession. I'm just saying, let's not just look at green on the screen for 5-10 days and say, okay, all the stuff that we used to care about doesn't matter.